Hi, everyone, and welcome to our webinar on a business advisory framework for your firm. Now, in this webinar, we're going to take you through the 6 elements of an advisory framework and how, as a firm, you can implement these easily within your practice. And it doesn't really matter what size of practice you are or what your experience with advisory is. This webinar is going to give you the tools to be able to either do it at a simple and basic level or push right through to the types of services that multi-award winning firms win or have been providing with advisory services. Now, taking you straight through, so if you don't know who we are, my name is Ainsley Damery. I'm the CEO of Clarity. We're a fintech startup that is building a global advisory platform and making business simple. Now, our platform bridges the gap between small business owners and their advisors, helping them grow and scale sustainably. Now, at the moment, we're just launched a phase 1 of our platform, and if you'd like to talk to us about a demo at the end, then please do. But this webinar is primarily about delivering advisory services and how you can do that as a firm. Steve is joining me as well. So hi, Steve.
Hi, everybody. Hi, Ainsley. Yeah, I'm Steve Brigginshaw. I'm the Chief of Ops here at Clarity.
Cool. We also have Amy joining us, and unfortunately, Amy's picture isn't up on screen, but she will be moderating any questions you've got. We are using Zoom, so if you do have any questions, please go to the Q&A. Go to the chat box and enter in any questions, and we'll make sure we get to you. And if you want to just raise a hand if you're having problems with sound or audio, then Amy can help sort you out. Now, we are on Twitter, so my Twitter handle is Ainsley Damery, and Steve's is Steve Brigginshaw. We share a lot of information on social media. Those handles are across most of the main platforms. But realistically, if you want to get hold of us quickly, probably Twitter's a good place to start. So please join us on Twitter. And of course, if you want to take photographs and share anything and tweet anything about today's webinar, we'd be most grateful as well. And please do tag in Clarity, which is at Clarity HQ. So that's at Clarity-HQ, or sorry, _HQ. We don't have hyphens in Twitter. Just a little bit background to me and where I've come from and my journey to Clarity. So I trained with KPMG. I came from a small business background, and I was, learned very, very early on the issues that small business owners had and the lack of support they were getting generally from compliance-based accounting firms. My dad left a relatively safe corporate environment to set up his own small business. And even at that age, I understood the change in family dynamics, the issues around cash flow, getting customers, marketing, all the things that a small business owner has to do. And you know, most of his friends were employed, so they didn't understand the challenges he was facing, and his accountant wasn't really there to support him. At KPMG, I really understood and experienced the level of high-level consulting and high-level support that big businesses get from accounting firms and from consulting firms. And when I moved to Teabally Tomlin, again, I was quite surprised from a national compliance-based firm in the UK. You know, comments were coming from customers like, for clients saying, you don't really care about me. And the partners would, at the time, were quite shocked. And they didn't understand that just by doing accounts and tax returns and doing the accounts really well and doing the tax returns really well and making sure the right amount of tax was paid, that's not what business owners were looking for from an accountant. They were looking for somebody much more. And I was instrumental in driving the changes at Teabally Tomlin and making it into the multi-award-winning advisory firm that it did become. I sold that last year to Crow to concentrate on Clarity. And Clarity is really our vision for the future, the vision for the future advisory, and really helping firms to deliver advisory across the firm, creating a scalable advisory solution. I'm also involved in 2 organizations which I'm very proud to be involved with. I'm on the board of Free to Shine, which is a charity that's based in Australia that operates in Cambodia and protects girls from being trafficked by keeping them in school safe. I'm also a founding trustee of the Cyber Trust, which is protecting those vulnerable and most at risk of cybercrime in the UK. So Steve, if you can give us a quick intro to you, that would be great.
Thank you, Ains. Yeah, so my journey's similar in ethos to Ainsley's, but not in the same path. I actually left school at 18 after A-levels and jumped straight into accounting. So I've been in the accounting industry all my life. Worked at a local small firm, but had the same impression that Ainsley had, that we could be doing more to help the business owner clients, to actually help them with their business rather than just complete accounts and tax returns at the end of the year. So in the end, I decided to leave that firm and start my own accounting firm and focus primarily on business advisory. So we did all the normal stuff, but the main emphasis was to help business owners grow and improve their business. And I sold that business in 2015. And the accounting element I got a little bit unhappy with, shall we say, but I really enjoyed rolling up my sleeves and helping the business owners to improve and grow their business and create their ideal business and ideal life as well. So I focused very much on becoming a virtual finance director, a business coach and business mentor. And I was lucky enough to write a book and write my own methodology that I created and launched that in 2016, which we're, again, very lucky to become and very grateful to become an international best-selling book. And I contributed to another book, which is the movement from Buy One, Give One. So a social movement that helping to make businesses give back to the community and those less fortunate. So I collaborated with another 60 authors where we explained what we believed a better business, better life, and better world would be and how to get there. And I've also been able to win a few awards in my time, myself and the businesses that I've run. And lucky enough, Ainsley and myself, we've both been able to speak at events all over the world as well.
Thanks, Steve. So this is kind of just an example of some of the awards we've won recently. A lot for innovation, advisory, I suppose pushing the boundaries on technology, culture, and brand and marketing. So very lucky to win those. And as Steve said, we have had the pleasure of being invited to speak around the world, and it's been really, really an exciting journey. Primarily, we've been asked to speak about small business, the challenges facing small business, how accountants can take the move from compliance to advisory, how you move to a tech-enabled advisory firm. But more recently, we've been asked to speak a lot about blockchain as well. And blockchain and artificial intelligence form a major part of the Clarity platform. So we've been very lucky to be able to be asked to speak about blockchain a number of times as well. Now, getting into a little bit about the background to our why and where we come from. So clearly our purpose, again, there's no pun on the word clearly, our purpose is to give every small business owner clarity. We want clarity because business is complex and people are making it so. We want to bring back simplicity and make business simple. We want to create clarity so that business owners can create a better business for themselves, a better life for their family and team, and ultimately contribute towards a better world, as Steve mentioned. Now, as an organization, we support the UN Sustainable Development Goals, and these were signed off by 193 world leaders in 2017. And if achieved, they would mean an end to extreme poverty, inequality, and climate change by 2030. Some of those are really, really big asks, but there's a lot of background to the 17 goals. And when Sir Richard Branson launched them with the UN, he said it was the first time a world body had recognized that it was individuals and small businesses that were going to contribute to changing the world rather than intergovernmental or governmental bodies. Now, this mirrors what Prince Charles was talking about at the ICAW last year when he said it was accountants that would change the world, because they had the power to inspire and train and encourage and support small businesses to help them become more economically viable and sustainable, to be able to help to create a more sustainable world. And that's what we're very passionate about, and we do that through our partnership with Buy One, Give One. I would encourage you, probably, the SDGs are not really well known in this part of the world. I'd encourage you to look at one of those goals that tweaks your fancy and see how as a team you can play on that, because we know going forward that having a purpose other than making money is really, really important, both to your millennial workforce, but also to the customers and clients that you'll be dealing with in the future. So it is really, really important that you look at how you can visually demonstrate your purpose. And this is a very, very simple and systematic way of doing that. So getting straight into the agenda, we want to cover the 6 elements of an advisory platform. And this is an advisory platform that I said that will work for any accounting firm. It will work for a firm that's just on the journey, just starting out with their advisory journey, or it will fit in niftily to those that have made the move to advisory, but maybe haven't formalized their framework or their approach. And this is something certainly that as in a previous firm that I was involved with, we used to use this to talk to our clients and prospects about how we were going to help them and how we were going to add value to them as a business. So I'd encourage you to look at the example we have at the end as well of that framework. Now, during the webinar, we also want to take you through how you can easily implement these within your firm. And not just implement at high-level consulting level, but implement them across all the 5 levels of advisory, which we'll take you through. And so everybody in any firm can do little bits of these things. And we want to show you how easy and simple it is to do that. So just kicking off with a little bit of intro, so to give you a little bit of background to advisory and why should I be involved in advisory and why is advisory important. And everybody's talking about the move from compliance to advisory, but perhaps you're looking at that thinking, well, we do a little bit or we do enough. We don't want to get heavily into a consulting or change the firm or have the skill sets to be able to change the firm. Well, that's just, I want to show you through here how everybody has the innate skills to be able to do what we're talking about. Every accountant has the training and the knowledge and the support to be able to give small business owners really what they're looking for. So just to give you some context here, there are 163 million small businesses in the world. There are 30 million in the US and 5.7 million in the UK alone. Now, small businesses make up 95% of all businesses worldwide. And in fact, in the US and in the UK, the numbers are mirror. They make up 99.9% of all businesses. So we're talking huge numbers of businesses here. So small business is really, really big business. Now, we know that they drive employment and growth. They build communities, build wealth, and create a more stable economy, both at a local level, a national level, and an international level. And this is why governments are so focused or pay lip service to being so focused on small business. But as accountants, we know the failure rates for small business are really, really high. And in fact, 60% of small businesses fail within the first 5 years, and those numbers are quite shocking. And when we go out to 10 years, depending on the stats you look at, we're looking at anywhere between only 10 to 30% that actually survive 10 years. So the numbers are really, really bad. And so why do we think that is? Why do we think that small businesses don't succeed and have such high failure rates? Well, as I said, the first main reason is that business is complex. The world is complex. It's getting more so. People are drowning in information and are starving for knowledge. And that's why at Clarity, making business simple was so, so important to us. So business is complex and small business owners don't really know where to go to help, unbundle that complexity. We also know that growing businesses consume cash, and getting access to cash as a startup as well is really, really tricky. So cash flow management, and getting access to the right cash at the right time are a really, really big issue for small businesses. The third big reason that we see mainly with small businesses is that they tend to have a poor understanding of their numbers. And even if you think that they have a good understanding of their numbers, when you actually drill down and start asking questions, then it becomes very, very evident early on that most small business owners don't understand their numbers. And in general, they're relying on poor financial data to make decisions, if they're even looking at that data at all. So we as accountants know how valuable, and we're able to impart such huge amount of knowledge on such a key area that drives business growth. It's really, really incumbent on us to be able to share our knowledge on numbers to small business owners. And the fourth main reason is no clear planning. And we know this. Small business owners spend more time planning their holidays than they do actually working in their business. And we know the importance of planning. And it's not planning for planning's sake, but the whole process of planning and what goes into business planning really, really drives a business forward. And when you're starting to build a house, you don't just start with some blocks on the ground and see what happens. You do have a plan of how that house might look when you're finished. That's not to say clearly that you don't add rooms or you don't change it as you go along. You don't change the color, you don't change the dynamics of the house, change windows, put in conservatories. But it does mean that you do need to have an idea of where you're going. Otherwise, you'll probably never get out of the port if you were a captain at sea. Now, when we look at the problems for accountants, they are pretty much the same as small business owners. And we know now that accountancy, it has mass competition. The barriers to entry are so, so low nowadays. And you can see that a one-man band can set up using cloud technology, offshore, outsourced to India or the Philippines, be able to compete on a big level with some of the bigger firms. And we've seen that at the various conferences we've been to over the last 6 months, how small firms are really, really showing the way and showing the light and how they're competing with the bigger boys. But of course, all this leads to a huge downward pressure on pricing. And we particularly see that in the areas of compliance, and particularly where clients don't understand the value or don't understand what you're doing for them, then price becomes a real huge issue. Now, clearly, as accountants, we've been dealing with regulatory and legislative changes over the last number of years, not only for ourselves and for our own businesses, but we've also had to help and train and talk to our clients about the changes that are affecting them too. And this has a massive impact on our ability to actually deliver what clients are really, really looking for from us, rather than being bogged down in the nitty-gritty. And of course, making tax digital and the digitalization of tax and the movement in technology over the last 5 years has a massive impact on accounting firms. And it's only the start, really. Things are just going to go from here, especially with big data, AI, and blockchain coming into play. So all this really has led to a need for new revenue streams. So accounting firms are looking for new revenue streams. They've all heard about needing to become advisors, needing to add value, needing to demonstrate value. But when accounting firms try to do this, oftentimes it's really, really difficult for them to scale advisory. And so they end up saying, well, actually, this probably isn't for us. Let's leave it for the advisory firms. Now, we want to take you through a model that shows you how you can bring and scale advisory in your firm and how that fits into the overall growth and development of your firm. And at the end, we'll show you a solution that will easily systemize that for you. And also we see that there's so many apps out there that it's very, very difficult for accountants and advisors and bookkeepers to choose the right apps that suit them. So these are the issues and the time that's taken away from you as an accountant. But let's look at what small business owners are actually looking for. And in a survey done in 2018, and this was done in the US, so it's not too long ago, and the results will be pretty much mirrored here in the UK. These were the 5 top things that small business owners were looking for from their accountants. Being a trusted advisor was number 1 at 78%. 78% of people felt this was very, very important to them. Now, the term is quite nebulous. We know trusted advisor is bandied around. But what that means is they're looking for a trusted friend, somebody to have a sounding board, somebody to talk to, somebody to be able to support them, somebody who's an expert in numbers who can help them understand their numbers, which is an area that they just don't get and we know is vital for business. Responding quickly came in at number 2, which was quite, I suppose, expected, in that we now, with the movement to email and internet, everybody expects an instant response. But clients are expecting instant responses. And how can we as a firm deal with those requests that are coming in from all our clients all the time? How can we be a trusted advisor and respond quickly to them? Now, clearly, understanding their business or industry is a really, really important aspect. And absolutely, clients should expect that from us. Being affordable came in at number 4, and communicating clearly with them as non-accountants at number 5. Now, to be able to achieve all these 5 things as an accountant, if you're being truthfully honest, is probably really, really tricky. To be there for them all the time, all of them all the time, respond to all of them really quickly with clear communication in plain English that they understand, understanding their particular problems and their issues, and being able to do that in a cost-effective manner. Now, that's an accountant I'd want to be with. But hopefully you can see that if we can bring technology to play, it will certainly help enormously in us delivering a cost-effective solution here. And I just want to move on to quickly onto the 5 levels of advisory and bring Steve in here. And just kind of start it off by saying that advisory isn't about all or nothing. It's not a binary, we do advisory, we don't do advisory. There is a huge curve in advisory, and Steve's going to take us through that curve now. Thanks, Steve.
Thanks, Ains. Yeah, as Ains mentioned as well, that advisory, the term gets banded around a lot, and it can mean different things to different people. And when we talk about advisory here, we're talking about business advice or business advisory services. So it's actually helping your business owner clients to get improve their business or to grow their business, whatever their goals are, but to be there for them and actually help them in line with what Ainsley just said there, to become their trusted advisor. So the first step, you can see that this is an ascending model. We start the foundation, this foundation stone called awareness. So here, all we're doing is understanding what's actually going on in the business. So the client has an understanding of where they are now, and then also where they want to be. So you have the start point, you have the end point, and then you can easily work out what the gap is. And these are all skills that we have within, as chartered accountants. We can look at like 7 key numbers and we can say, well, this is where you are now. We can play with some sensitivity analysis to work out where they want to be, and then we can identify the gap and help them with that. And which leads nicely into the next level, which is accountability. So that's actually working with your clients. So you could just give them the awareness that they need, or you could actually say, well, actually, why don't we work together? Why don't we work together and I'll hold you accountable more as like a coach or a mentor, because I'm skilled in numbers and you're busy running your business. Let's work together. I'll hold you accountable to make sure the action tasks that you're supposed to complete get done, and that they're actually going to fulfill the plan that we've agreed. And the third step is insight. So here again, this is where our skills of accountants can come in. We're delivering more detailed understanding of what's actually going on in their business, what's possible with their business, and what they need to, how they can improve their business, what numbers actually need improving, and what changes are actually happening. So it's more analytical. So to give your clients a clear understanding of what's happening underneath the bonnet, and what they need to do, and which things need to be tweaked or improved to actually get to where they want to be. And the fourth step is planning. And this is where we're going to be looking at things like cash flow forecasts, business plans, budgets, business models, creating KPIs for them, helping them identify, maybe in addition to the 7 key numbers, there's some specific key performance indicators that the clients need to look at. And so from there, you can help them identify them and then help them plan to where they need to be. And then the final step is consulting. So this is the highest level of business advisory, is where you're looking at more of a management consultancy or a business coach approach, where you're using probably the skill and the business acumen and experience of the business owners within the accounting firm and the higher senior management, so that they can actually impart their wisdom to the clients and down into the team as well. So anyone within your team can deliver steps 1 to 4. And then it's just that final step where you may need to help your team to be able to deliver that final point. But that tends to be the big ticket item anyway. And as Ainsley mentioned, if you're delivering advisory already, it may be £30,000 a year, or $5,000 a month, or whatever it would be for your particular clients, because you may well be delivering that consulting piece already. So the idea here is that with the rest of those steps below consulting, anyone in your team that you trust to pick up the phone can actually help your clients. So those of your team who are on the front line, and then create potentially new service lines for you, and then better serve your clients as well.
Thanks, Steve. I've just got a few questions that we've come in, so if we can just deal with those quickly, that would be quite cool. So the first one was, do we get a copy of the slides? So absolutely, you get a copy of the slides. So Amy will be sending those at the end as well, with a recording, so that you'll be able to go back over this and take it slowly and go at your own pace. I'm Irish, I talk a little bit fast. I'm always passionate as well, and sometimes I get a bit carried away. So you'll be able to slow me down. The next question was also, sorry, I'm looking at my other screen, was from Sue. What level do you think accountants should focus on, Steve? What level of the 5 levels do you think they should focus on, or should they, I suppose I'm adding to this question, should they be focusing on any, and should they be covering all 5?
So it depends on I would say it depends on where you are as a firm. So if you're just starting, you haven't gone into the business advisory space already, just start at the bottom and work your way up. This is supposed to be a step-by-step approach, these 5 levels, so that once you have that foundation, it leads to the next. So I would say just start awareness and help your clients understand where they are now, where they want to be, and how they can bridge that gap. So using clarity will really help get clear on that awareness piece. So that's where I would start if you haven't got into advisory before. If you are in advisory already, in business advisory, I guess it would depend on what you're already delivering. So if you're delivering virtual CFO roles, if you're delivering consultancy, so those are the higher, the top 3 rows, top 3 steps of the advisory levels where you may already be delivering. So what I would say then is look to what your frontline team, so your team that have access to your clients' data and actually have communication with your clients more regularly, and see what they could bring in. So how can you utilize your team to actually add more value to your clients and potentially create new service lines as well? Because not all of your clients will necessarily want to pay or be able to pay the high ticket items for consulting and planning and insight potentially. So I would then say, well, look to see what you can roll down, cascade down into your firm and get your team involved and help more of your clients.
Great, thanks, Steve. So that answered one of the questions which was coming next, which is where do you start? Where do you get started with? So you've answered that, starting with awareness. Thank you. And somebody's also asking, which is Alison, do you recommend any packages for these different levels? And I think We will be getting into the nitty-gritty of how you do that framework. We, as a firm, for our as a software company, for our Clariteers and the members of our Clarity community, we do recommend packages, but I mean, those are quite broad spread, and it depends on the types of things you're doing. So I don't think we'll be giving any specific packages here, but we will certainly be showing you the things that you could build on and the things you could use. Is that correct, Steve?
Yeah, and I think we'll be running similar web events that people can sign up to, and where we will go more in depth into the 5 levels of advisory, and also the types of packages, and also some suggested pricing as well for each of those packages to get you started.
Excellent, great. So if we can crack on, we'll keep the questions coming. That's no problem. If we don't get to answer all the questions, I'm sure we will certainly respond directly to those who've raised any questions that are really, really specific and important. But keep asking questions, and we'll make sure we get to them at the next break if Amy doesn't interrupt already. Cool. Thank you, Amy. I'm distracted by questions now, so I need to stop looking at questions. Okay, so we wanted to show you, if I could go back, excuse me. So we wanted to talk through the 6 levels and the 6 elements, the 6 elements of an advisory framework. These aren't levels as such. This is following a journey that you would take a client through. And it starts primarily potentially with a brand new client, or with a client that when you've just started getting into advisory services, this is the types of things you need to start looking at. So what we're doing is we're taking you on a journey. It doesn't mean you have to go all the way from 1, 2, 3, 4, 5, 6. It could be that you step across certain elements, or you do bits and focus on more. So it's more a framework, not a prescriptive way of delivering an advisory solution. So we wanted to take you as an accountant, how you would go on an advisory journey, and the types of stages that are likely to come into play, and the logical next steps. But that's not to say that you have to follow our logic, or that you can't step over steps and move on to the next rung of the framework. So it is a circle, because, as I said, it's a complete circle, and it moves right through the journey of a client from the start to the finish. So from a potential prospect meeting right to an exit where they've sold their business and they're moving on. So we've structured it that way, but again, please don't feel that you have to be restricted by the framework that we put in place. So the very first starting point on the framework is gaining an understanding of your client's business. So this is really, really critical. And if you're obviously looking at a prospect, this is really important that you get to understand at a very early stage, and you start differentiating yourself as an accountant by asking those really different questions, like getting under the skin and under the bonnet of your client's business. And that really pushes you apart from everybody else, and shows from a very early stage that you're very, very different. So gaining an understanding of your business is the very, very first step. You need to understand where your clients are now. Because if you don't know where they are now, you don't know where they need to get to, what the gap is, and how you're going to close that gap. So understanding where they are now is really, really important. And particularly with a new prospect. And at Tolman, we did this before we saw the client. So we would have a discovery call where we would find out information about the client and ask them certain questions and get them to send in various information to us before we ever had our first meeting with the client. And we felt that was really important, because we wanted to show and demonstrate the value that we could deliver for that client at the very first meeting. And we didn't want to get involved in that meeting at giving away intellectual property and our knowledge. We wanted to have that meeting to show what we could do for the clients and how much it was going to cost them. And then we would get into questions about structure and tax and all the types of questions that tend to get asked at a very, very first client meeting. So it's very, very important that you get to understand the financial statements of that business. Now, if you're dealing with an existing client and you're doing compliance only, it's possible that you're just going to do the accounts for the sake of filing and making sure they're pretty and making sure the balances are right and making sure the accounts are reasonable. But you may not be taking a step back and actually looking at those financial statements from a business development perspective, as having a new pair of eyes on them. So has the business grown? Why hasn't it grown? Why have expenses moved? Why are they changing what they're doing in certain elements of the business? How is that affecting the bottom line? Are they adding revenue but not adding profitability? All those types of things that are really, really, if you take a step back and look at it from a different perspective, gives you really, really interesting questions to ask a client or a prospect about their business. So having a really, really strong review of the financial statements is very, very important. Also, what we used to do is look at the tax structure of a prospect, or particularly if we were looking at developing or moving or any changes that were coming in play with an existing client, we would be looking at the tax structure, looking at the efficiency. We used a 74-point questionnaire to go through with the clients to look at the tax efficiency. And that's really, really important. Again, it's showing that you're not just doing the tax return to submit it and for the authorities, the IRS in the US or HMRC in the UK. You're looking at their tax affairs from their perspective, from what matters to them. So that's, again, really, really important that you understand what's going on from a tax perspective, how you can make them as efficient as possible, how you can save them as much tax as possible. And that's clearly a really good quid pro quo for the fees. And also looking at the structure and going forward, is that the right structure and the right way for them to be growing and scaling their business? The next element that you really need to understand is the 7 key numbers in their business. And these are the 7 key numbers that affect any business. They're critical for the business's health, their growth, their stability, and their scalability. And if you're not sure of those 7 key numbers, those are revenue growth, for obvious reasons, gross profit percentage, operating profit. So one, how are they doing with their manufacturing or their delivery of services? Are they actually doing that effectively and efficiently, and could they be doing it better? How are they doing with their overheads from their operating profit perspective? We also look at the 4th number is revenue per employee. So how efficient are their systems and how effective are their team? The 5th number is their core cash target. So do they have enough cash in the business to sustain the business and to help the business grow? And cash days becomes the really key 6th number, which is really important. The cash flow, health of the business and the cash flow management within the business. How effective are they operating? And that final number is the business return. So how much is the business generating return for the business owners? Is it enough for them to be actually working in a business, or should they be getting a job? So those are the 7 key numbers that affect any business, and you should understand those really, really clearly and be able to understand what's happening in your client's business around those 7 numbers, or your prospect's business around those 7 key numbers, and how you can help improve them. The next key area that you need to get under the bonnet of is the management reporting framework. How often are they preparing management accounts? Do they prepare management accounts? Because only 20% of businesses actually do. Are they using software that enables them at a push of a button to get management accounts? How are they looking at their bookkeeping procedures? Are they making journals? Are they looking at work in progress? And are they looking at prepayments and accruals when they're preparing their management accounts? Or are they just going as to what the bookkeeping procedure, what the bank says, and just using effectively a cash basis? These are going to be really, really important, particularly in the UK, going forward with making tax digital when we move to quarterly tax returns. But, why do we need tax returns to drive us creating proper management reporting? We should be doing that anyway, because that's vital for the business owner to understand where they are now, where they're going, how they're achieving their goals. Are they making the money they should be? Are the decisions that they're taking being reflected in the numbers and in the bottom line? And, we need proper management accounts to be able to support this. What goes into the management pack? Are we looking budget versus actual? Have we got a list of debtors and creditors? And, are we on top of all those things? And so management reporting framework is a really, really important area where you can get under the skin of your client's business, and where you as an accountant can add massive value straight from the get-go without any stretch of imagination about how you could help them as an accountant, and without any new skills. This is brilliant stuff that really, you need as the expert to be able to pushing the small business owner to move along these lines. How are their bookkeeping records? At Departmental Analysis, grade their accounting records and charge them on the basis of that, of where they sat on that grading. If they were poor, they paid more for their accounts. And we would train them and help them get their accounts cheaper, because we didn't want to spend time on their financial statements. We wanted to spend time helping them grow while helping them on what they wanted to do. Where are they with their strategic business assets? The 7 key assets that they have in their business, where are they on that journey? Have they completed those things? Are they looking at brand, culture, guidelines, mission, vision statement, systems, team, you name it? Are they on top of all those areas? So you need to be looking at the key business assets in the organization, and are the business owners, are they putting all those things in place? We used to also do a thing called strategic SWOT analysis, which looked at internal, external, governance, and and outward facing strategic points of the business. And this was really, really powerful for a business owner to be able to understand very, very quickly where they needed to put attention to and help improve their business. And finally, team profiling. That's kind of an interesting one for accountants to get involved in, but there are a number of really exciting team profiling tools out there. And certainly we used the Wealth Dynamics profiling tool because it was primarily built for entrepreneurs. Everybody's a winner. It focuses on people's strengths rather than where they go to when they're under pressure, which some of the other profiling tools do. So that's the one we will use. But clearly there's DISC and there's numerous other profiles out there. And you might be thinking, why on earth do I want to profile my clients? Well, one, it will help you give an understanding of how you should be communicating with the senior management of that team. And it might also give you some insights to be able to help that business owner understand how they can communicate with their team and do they have the right numbers and the right members on their team. So again, it's a really, really interesting one to look at and something potentially you haven't thought about, but something that you can do really easily and effectively in a cost-effective manner, and certainly using some cloud tools and technology that's out there too. So there are, that's the start, getting an understanding. And again, these are just examples of the ways that you could do it and things that you could do. Okay, Steve, take it over to you.
Thank you. Yeah, so working with them, the second step in the framework is working with them to understand and plan for their future. So the whole point of all of this, just to reiterate, is to be a collaborative approach. So you're actually working with your clients to help them understand and move forward and help you understand as well. So with regards to understanding and planning for their future, the first thing that you could use is sensitivity analysis. So here, what we're doing is playing with numbers. As accountants, we like numbers. And we're looking at what potentially their business could look like in the future if we tweaked a few things here and there. Again, to reference the clarity, the future section within the numbers will easily enable you to do that with your clients. And it's quite good fun to get your clients to actually play with those numbers themselves. And then you can see what the cumulative effect is on profit and cash and whether they're happy with that. The next point is budgets, cash flows, and reporting. So it's making sure that you have more of a plan in place and then being able to manage that and report back on that. The third point is benchmarking. So that's comparing them to their peers, their competitors in the sector, in their region, and having a clear understanding. So that doesn't necessarily give you a how, but it gives you a what. It tells you what's actually going on in other businesses and what is possible with other businesses compared to your clients. So if they're not quite at the top of the benchmarking quartiles, then they can see what some other businesses are doing. So how do we do that? And you can start helping your clients to ask those questions, or you ask those questions to your clients as well, and they come up with the answers. And sometimes you may be able to guide them with the numbers as well. Next is business plans. It's making sure that they have a clear understanding of where they're heading and also with their goals as well. So we want to make sure that a business effectively is a vehicle. It's a vehicle to fulfill a mission or vision, but also to help a business owner create their own goals, whether that's financial or from a time perspective or from a missions perspective. So it's a great opportunity for you to sit down and ask these questions in terms of what is it that you want to achieve? What do you want to be, do, and have with your own life? And what does the company need to achieve to make that happen? And then what do you want to do with your business? What mission, vision do you have for your business? So it enables you to really get into the mind of the business owner and also get under the skin of the business and help to steer that in the right direction with good business planning. The next is we're looking at business model design. So it's here making sure that what's actually the business models that the business actually has are the right fit for the business and that they're going to produce those goals that you want to have. Next, we're looking at strategic planning and having strategy days. So it's helping to, again, cement all of this all together and spend time with the client to actually understand what's going on, where they want to be, and put all of these different strands together all at one point in time. Financial modeling is next. So here, potentially, you would start from the profit up and work upwards through the P&L, because you know, as an example, that the business owner wants to earn £100,000 a year after tax, let's say, for argument's sake, from their company. or whatever else, X amount of profit so that they can return to shareholders, whatever the case may be. You start with the profit figure and work backwards, because you'll know what the overheads are, you'll know what their gross profit percentage is. You will then get back to revenue, and then you can pick apart how that revenue is made up and look at the different areas in terms of how that revenue is created in the service lines and what the business then needs to focus on. And the eighth step is being able to identify key performance indicators and create a dashboard for your clients, and then help them monitor that as well. So all of these points we can do as accountants, but you can, if there's certain things you're not sure about, you can use Clarity, you can use other apps that are out there. So for an example, Futurely or Spotlight or Fathom, you can use Float and I forgot the
Fluidly.
other one. There we go. Fluidly, thank you very much. I knew it was an F. Thank you, Ainsley. They're all built to help you deliver this, so that you don't need to feel afraid of not jumping in and actually getting involved. These are all things that we can do as skills of as accountants, and there are tools and systems out there to enable you to do that. So just pick one or two, or maybe three areas just to get stuck in with to start with.
Absolutely, Stephen. You know, at Departmental, for example, with planning, we used Live Plan potentially to develop a big business plan for our clients, particularly if they were going to a bank. The business model design, we used the business model canvas, which is a fantastic tool, very visual for business owners to be able to visualize their business. Clearly, you know, for KPIs and dashboards, Futurely and Fathom, surely, and Spotlight absolutely fit in well there, and potentially with the cash flow analysis, Fluidly and Floats work well. So, you know, this is the second step. So understanding where they are now, where they want to get to, and knowing what that gap is really, really critical to be able to help them move their business forward. And that's really kind of where we're looking at the next stage, because we often find with businesses that they don't have the right management reporting to support their growth. And again, this is an area that we as accountants are innately built to be able to help them do these things. It's very simple for us to be able to advise our clients on management reporting to support their growth. And it's really the key area that they fall down on. And sometimes as accountants, we just let our clients rule the roost and say, oh, I don't want to do that yet, or I'm not going to do that. That's your job. And really, that's not the right way to be treating our clients. We need to take the role as expert. We need to take the lead, and we need to drive their knowledge and experience and understanding and the way they do business from a management and financial reporting perspective. So the first really key area is looking at is the software that they're using. Now, clearly, I would like people to move towards a cloud solution. Cloud accounting is really the way forward. At Departmental, we did have a number of larger businesses that needed to use other non-cloud solutions because of CRM systems or whatever else, or the reporting framework and systems they had in place. But generally, for most small businesses, cloud is the right way to go. And you know, you need to choose the right one for your firm, and you need to choose the right one for your clients. So we're not being prescriptive here. I used to use Xero and QuickBooks, for example, but that's that's not necessarily that they're the only two out there, or that they're the two right ones. But certainly they're the two largest and the most known in the marketplace. But you know, there are other solutions out there like Free Agent and so on, Sage One, etc. So cloud migration is probably a really, really important thing, and something for you to get involved with your clients. And also looking at the add-ons, because it's not just about the cloud accounting software. It's about the add-ons that go with the cloud that really drive efficiency and performance within the client's businesses. So inventory systems, debt collection systems like Chaser. You know, there's so many of them out there that you need to be looking at and seeing if they're relevant for your clients. So really, really encourage you to look at the add-ons that really work well with cloud software, if that cloud software is appropriate. Now, training on software is really, really critical as well. So helping your clients understand how to do their accounting better, making them understand their numbers. Knowing their numbers is a really, really critical element for them. And it's not good enough for them to just abrogate responsibility to you as their accountant, as the financial person. They need to understand their numbers to be able to drive their business growth going forward. And one of the key things that business owners don't get, and is really, really important when you start having conversations with them, is departmental analysis or sales line analysis. So having a gross profit for each department and for each sale line. That will help you understand which parts of the business are doing well, which parts of the business aren't doing well. And the more effort that goes into building and generating that, the better the results will be. And this is a really important area of business that so many business owners skip over. And so many accountants, when they're just doing the VAT return, are just employed to do the year-end accounts. They just don't get the time, or they're not paid enough to actually focus on this area. But it's so critical, I'm sure you'll appreciate, to actually understanding how the business is performing and to be able to advise the accountant, the business owner better. The next key area is bookkeeping procedures, because it's just not good enough to process the VAT return. That's fine for, year 5 ago. It's really, really important now that we understand proper management accounts, that we even out that income, that we're getting income recognized properly, that we're matching costs accurately, that we're actually doing those procedures that we would do at the year-end accounts, which is looking at things like looking at adjustments, accruals, work in progress, etc., etc. So that's really, really critical. The next area that we need to look at is revenue recognition. So, for example, when are we recognizing income? Have we got accounts that go up and down and up and down and up and down? And if we do, there's probably something going wrong. Businesses don't generally tend to have that seasonality in their business. Okay, sure, they'll have seasonality, but if it's going up and down and up and down and up and down, we need to be understanding and maybe looking at the revenue recognition that's going on. And also budget versus actual. Now, this is really, really critical. Now, even just putting in a budget, which is last year plus 5%, and measuring that against actual and holding our clients accountable to that on a monthly basis, that alone is so, so valuable. Now, I don't agree that's the right way to generate a budget and the right way to generate a number to compare against. I would be advocating a much more deeper understanding, the financial modeling that Steve was talking about, building a model that would understand every decision you took before you took it, what the impact of that would be really, really powerful. So I do think last year plus 5 or last year plus 10 just isn't the right way to go, but it's a really, really good starting point. And if the client doesn't want to spend money with you, doing that quickly using some cloud tools to be able to generate last year plus 5%, sucking it out of QuickBooks or Xero, putting it back in, and then just measuring that on a monthly basis is really, really powerful. And clearly I'd like a more detailed budget. Cash flow statements. Cash is so critical to small businesses, and cash flow management is key. Operating cash is the most important type of cash, and so many businesses don't understand if they're generating operating cash. Now, you as an accountant probably tick the exemption box on the year-end accounts for the cash flow statements, which said, we don't need to prepare them. But in reality, that's the most important financial statement that you could give your clients. It's really, really critical. How many times do they come into you and say, I couldn't have made that profit, I don't have it in the bank? Well, if they understood the cash flow statement and you prepared it and you took it through them with them, then they'd understand where their cash had gone, why they didn't have that money in the bank. So operating cash is really, really critical. And as accountants and as a profession, we really need to drive our clients' understanding of cash flow statements. And so all of us bookkeepers and advisors out there need to be preparing monthly cash flow statements and looking at operating cash. And the last key area that you can work with them is putting in diagnostic reports, understanding issues before they arise, looking at key balance sheet ratios. There's a reason banks look at key balance sheet ratios and investors and lenders look at key balance sheet ratios, because there's so much information in the balance sheet and so much more valuable information in the balance sheet, particularly about the health of the business. And we know as accountants, we can make adjustments to profit, but we can't make adjustments to the balance sheet. Certainly not if they're right. So balance sheet and understanding key balance sheet ratios is again, really, really important. So I'm hoping you're understanding here that when we're looking at business advisory, all the existing things that we do as an accountant fit neatly into the advisory. They just need a small tweak. Steve.
Thank you, Ains. So building upon the previous 3 steps in the framework, the 3 elements, what we're going to now is actually holding your clients accountable. So again, it's this collaboration approach, is sitting down and working with them. So the first step here is looking at the management accounts and having a clear understanding of what's actually going on. So they're reviewing the numbers, they're having a clear understanding why things have gone up, why things have gone down, and what they can do about it. So this is when we were talking about earlier, the steps, the different levels of business advisory. This is where the insights element comes in, because we're using our skills as accountants, for being numbers people, to be able to speak that language in plain English, obviously, to the business owners. Because at the end of the day, numbers are the business, numbers are the language of business. So we need to be able to interpret that for our clients. So then the next area we will be looking at is changes in their 7 key numbers. So again, looking at where what we set as our targets, what we had previously, and what's changed, and are they going in the right direction or not, and the reasons potentially why that could be happening. And we won't know those answers, but it gives us an opportunity to say, well, your revenue per employee has decreased. What's happened? What's happened with your team? What's happened with your revenue? Let's have those conversations with the client, and they'll be able to tell you the story and paint the story for you, and you can help them understand how those actions that have happened have impacted the numbers, and then they'll have clear in mind then in terms of how they can stop that in the future or improve them in the future as well. As Ainsley mentioned, looking at the budget versus actual it's such a basic thing, but it's so powerful, because it's not only holding your clients accountable to achieving what they're supposed to achieve, and then they know that if they stick to their budget, they'll get to where they want to be, but it's having that understanding behind why the numbers have changed. Again, that conversation, this is below budget, or this is over budget, why did that happen? And then having a further conversation with the client, because they have the answers already, but then you can help to interpret that into clear insights to help them improve their business. And the fourth is looking at the management, either having monthly or quarterly reviews in addition to the management accounts, and checking calls just to make sure things are going well. And it literally could be just, how's business? What's going on? We discussed this last time. What's happening now? It's just having that point of contact, and them knowing, coming back to what we discussed at the beginning of this web event, being that trusted advisor and truly understanding their business and being there for them to help, and that quick response. The next point is having agreed action plans. So knowing who's doing what and when, and then holding them account to actually make that happen. Holding yourself account as well if you need to deliver something for the client, but you holding the client accountable and potentially their team as well, making sure that the boat is still moving in the right direction towards where they're sailing off into the sunset. The next point is reviewing goals and KPIs and targets. So making sure that everything's on track. You've did a lot of work potentially previously before in those different elements, and the 3 elements previously in the framework. So then it's just bringing it all together and making sure that the progress is being made as it should be. In addition to that, you're going to have some general financial support. They may have questions about numbers. You may be able to give some insight that you've noticed within the reports. So it's just giving them some of that general advice and support that they may well need. Could be, do we have enough cash to do X, Y, and Z at the end of the month? And you'll be able to help them with the information, the infrastructure of reporting that you put in place. And then the final point here is looking at board support. So helping from a more of a strategic level. So looking at their strategic plan and making sure that the numbers are flowing in the right direction. And again, these are all things that we can do as accountants. So all of us can create or just have these conversations. Literally is building relationships and continuing those relationships as the trusted advisor, and really helping your business owner clients build their ideal business.
Yeah, thanks, Stephen. I think it's important to realize that we can call these things different things. So we can say we're an FD, and we might only do numbers 1, 2, 3, 4, and 5. We might be a CFO and go up to 8. We might just deliver these services at a very basic level and say, I'm just going to do a monthly call with you, and just review your management accounts. There's so many levels here. You don't have to do all 8, and you don't have to go 1 through 8, and it's not prescriptive. It's about the 5 levels of advisory and understanding your capabilities and your comfort zone, and how you can fit in and how you can help your client. So the next stage is scaling up. So number 5, the 5th wheel on the journey. So we've understood where they are now. We've understood where they want to get to. We've put in place proper reporting to be able to help them manage whether they're going where they're supposed to be going, and then we hold them accountable. So number 5 is, okay, so now we've got that all in place. Now let's look about scaling the sucker. Let's look at about making this business really, really zing, and let's push this business and achieve massive growth and massive profitability that's, you know, capable within probably most businesses, if we're being honest. A lot of it is down to mindset. Now, where we're really, really strong on is that you need to be better before bigger. Too many businesses out there put too much fat on first before they've actually achieved you know, a scalable, sustainable business. And sometimes those businesses just grow broke. So we're really, really huge advocates of a better before bigger. So getting the business sound, getting everything into play, making sure that you've got the right support, the right management reporting, the right goals, the right plans, everything's aligned. And now let's push the boundaries on what we can do with this business. Not just adding weight for the sake of it and pushing top line growth for the sake of actual profitability. You know, you've heard that phrase, you know, turnover for vanity, profit for sanity. And, you know, that's really, really important to understand. Now, another big thing that you can help here, and this is kind of just prodding and being the prod and the nag, is pushing the boundaries and continuous improvement. Too many businesses out there are set up to maintain the status quo. And when we hear about entrepreneurial organizations and agility and adaptability and pivoting and all these phrases that are being used, it's because generally we're not accepting the status quo. We're an organization that has small groups, small teams that are responsible and have responsibilities and have delegated responsibilities for driving the business forward. And we're always asking, how can we do this better? And when you mean how can we do this better, I mean how can we do everything better in this organization? How can we operate better? How can we answer the phone better? How can we greet customers better? How? So it's always about how can we do this better and never accepting the status quo. Now, it doesn't mean that everybody does it differently in the organization. It means that if we find a better way of doing it, everybody does it the better way, not that we all go off on tangents and all do everything differently. It is systems, and systems are really, really critical. And that's going to be then one of the next topics we're going to talk about. So systems are key, but we do need to be constantly maintaining systems and always upgrading systems. And whenever we have firefighting in a business, it's generally because the systems are failing. So when you grow and you double in size, and probably from the size of about 10 or 20, every time you double in employee size, the systems are going to fall down, and you'll need to be looking at systems in advance of them falling over. So the main area that we believe to help you scale and to put in a proper framework around scalability and helping a business grow is around their 7 assets. So where are they on brand and culture? Have they got a proper purpose, vision, core values? Have they got those in place? Are they up to date? Are they operating properly? And are they true? And are they what actually drives the business forward? Where are they on their finance? We've talked about all the assets already that they should have in the finance. So budgets, cash flows, KPIs, dashboards, management accounts, cash flow statements, you name it. Have they got those in place? Help them put them in place. Lock them away, put them down. If they're not in writing, they don't exist. So let's put them together. Let's keep them together. Let's keep them logically so that everybody can understand in the business where they're going and how they're achieving, and are they completing their business assets. And a good friend of ours, Daniel Priestley, has this book called 24 Assets. And he's looking at, he's expanded the number of assets out there. And his phraseology is that income follows assets. So if you think about any asset in the world or any income in the world, it generally comes from an asset, or certainly the bigger incomes come from assets. And assets don't necessarily need to be land and buildings, because a lot of the assets that we're generating income at the moment, like the Ubers of this world, are intangible assets. Then those are really, really important. Those are really, really important. Sorry, clock's going off. That's probably because we're way behind, and as usual, we need to speed up. And I haven't got a warning from Amy yet, so we're not doing too bad. Legal and governance, are you covering those areas? Products and services, have you got the right documentation in place? Are you looking after all those things that you need to have in place? Systems, really, really critical for a growing business. Team, and tangible and intangible assets. And again, we've talked about those. So are those stored logically in sequence and in a sequence? Are they understandable? Are they accessible? If you went to the bank to get money, Have you got all the right documentation to be able to help them straight away? If you're looking for investment, can you show the investor, here's what I've got? So all these things help you grow a scalable business and are really, really important.
Thanks, Zane. So the last element is planning for exit and maximizing value. So obviously here, if you're planning for exit, you're looking at the business valuation itself. So that's one way to track the progress of a business as well throughout its journey. It could be one of their key goals to have particular value. So you can create a business valuation throughout the whole journey of working with them, not just at the end when they get to exit. And you can actually help them create the ideal A number valuation that they want to get to. And again, we've talked previously about different tools and different apps available. As accountants, we know how to value a business. There's different approaches and methodologies. We had to do that as part of our exams. So we know how to do this, but there are apps and tools out there to help you to create a business valuation very quickly. So if you don't want to spend the time or don't necessarily remember how to do all of the approaches, then you can use a tool or an app to help you do that. We're also looking here at creating a business that works without them. So ultimately, that's the end goal of every business, is that they either want to be able to step away from running their business because they're constantly caught in the treadmill of time for money, and they want to just be able to breathe and stop and do the bits that they love and have a team around them to do everything else. Or they want to retire from the business but still have some form of income or maybe some input into the business, or they want to exit. So those are really like the main end points, the end games that every business is planning for. And what you can do here as well, is leading up to this point, is help them understand what that end game is and then work backwards. And then from there, you can see what each year they need to achieve and enable to get on track with their plan in terms of their own time frame as well. The next step is looking at funding and investment plans. So as you've created all these plans, you will see where they'll need to borrow money, where they'll need investment potentially for rapid growth, and also how are they going to get the money for when they exit. As Ainsley mentioned before, compiling all of that information into a very structured way and having that in a data room as an example as you're going along, growing and building the business. That enables for a much cleaner transition when you do actually exit or when you do require lending or investment, because all of the information is there and you can just open up the relevant elements to get that money on board. Succession planning is the next point to consider. Is here just asking the questions in terms of who's going to carry on once you're gone. Are you going to sell the business because there's nobody in your business to help you? Or the management team, would they like to buy in, or are there other elements, other team members who will be able to carry on from you, and can they borrow money to enable to buy in? And interestingly enough, this is a really good point for your own firm, looking at succession planning and seeing who else is going to take over the reins once you decide to retire, or potentially maybe you're going to sell your accounting firm too. The next points are looking at tax and structured support. So again, with looking at the end in mind, how are you going to structure the business? What areas of advice do the business owners need from a tax perspective? When they're looking to exit, are they going to be in the country? How are they using their entrepreneurs relief, and so on and so on. So just making sure that you have an eye on all of this to help them to exit as best as possible. The next is looking at the team development and recruitment. So what team needs to be in place for succession? What team needs to be in place now to continue that process and to get the plans in place? And what's going to give maximum value? What's going to give maximum value for the business once they get to that exit point? Like, what team members need to be in place, what roles they need to be doing, and how you're going to recruit them and get the right people on board. The same with network building. There's a saying that you build your network before you need it, so that you can actually use it and rely on it once you have it in place. So again, it's looking at that and saying, well, this is the end in mind. Who do I need to speak to? Who's a potential buyer of the business? Who are the potential strategic partners that we need in our business to help, or the client's business to help them get to where they need to be? And then it's just making those connections and those 7 degrees of separation. Everybody knows everybody. So it's making sure that you're connecting with the right people to build that network that you need before you need it. And then the final point is due diligence. And again, this is an absolute nightmare if you're not prepared. Due diligence is a horrible process, particularly when you're selling a business, and the warranties and guarantees that you may need to give to the purchaser can be quite onerous as well. So if you're building all of the information as you go along, and if you're actually having that verified potentially on blockchain as well, if you've got that somebody else, a third party, to verify that data, gives greater reliability. You have everything all in one place. They can see the timestamp of everything so that they know it hasn't just been completed last week, it's been completed over the last few years, building up to exit. And there can be more emphasis and more reliability on that information. So there's less warranties, there's less guarantees, there's a smoother process, and then it happens in a quicker time frame as well. So it's making sure you have all your ducks in a row, basically, and having that end in mind and working backwards from there.
Thank you so much, Steve. Now, we've had a number of questions that have come in, and I will probably, some of those are going to be dealt with by what we're going to talk about going forward. I think one of the key ones that I can probably ask you, Steve, was coming is from Connor. Are there any tools or apps for valuations that you've used?
Oh, it's a good question. There's one I can't remember, unfortunately. I know Daniel Priestley is an advocate of this particular methodology with valuing. So there's that one that you could use, if I can remember what it is. The other one is the saleability score. So that's John Warillo. So he has created a scorecard effectively to help you value your business based on certain questions that you can answer in terms of how systemized is your business, how dependent is your business on key personnel, as well as the financials. So it goes into a non-financial and financial basis, and then it will give you a value and also a multiple as well, in terms of this is the multiple of your profits or your EBITDA that the business you can get from a valuation, and give you tips on how to improve that as well. Discussing some of the things that we've discussed already in the framework today.
Yeah, I mean, I have to say we used bespoke valuations for our clients, but I think that was because of the size of the advisory we were doing for them. Okay, let's move forward. Just a quick summary of all of that, Steve. Basically, one is getting an understanding of your clients, where they are now, working with them to understand where they want to go to, what their plans are, what their goals are. You know, those sorts of questions, just even asking those put you in a very different space from many other accountants. Helping them improve their management reporting to enable their growth is just so, within what we're used to doing as accountants. So it's not without and that shouldn't be outside our comfort zone. And holding them accountable. You know, we can have different levels of accountability. We can have gentle monthly calls, we can have formal mentoring calls, we can have board meetings. And again, getting our clients to have a proper board meeting and having a structured agenda is a really, really powerful tool if they're not already doing it. And it really makes them grown up and pushes the business forward. So, you know, you don't have to be a guru board member and have been on zillions of boards to be able to start offering board support to your clients. It's really, really critical. You don't have to go that far. You could call yourself an outsourced FD, finance director, whatever, and just be able to offer a bit more help with them on their finances and getting the departmental line analysis, getting everything in place so that when the business is ready to grow, you can help them push that growth to where they really, really want to get to. And then it's all about helping them maximize value and plan for exit. So I hope you can see it's a very interesting wheel. You don't have to follow it all in specific order. You can jump around. But it's a really, really good story to share with clients, and a really, really good tool to explain to clients how you add value and what you do for them as an accountant, and how you're going to help them achieve their goals and achieve the success and the profits that they deserve. I'm sorry we're overrunning. It's typical with us, I suppose. It's to be expected, but I hope we're adding massive value. We've probably got about 5 minutes more, so apologies for overrunning, and we'll get to any questions that we can at the end, but I don't want to hold up anymore. So I just wanted to take you through the example that we had, that we used at Taya Valley Tumlin, and the types of phrases and phraseology we used around some of the things. And we were into packages and products at Taya Valley Tumlin, so we tried to productize it as much as we could, because people understand products more than they do services. So for example, or getting to know them, understanding them, getting under the bonnet of their business was called a deep dive. And it was the TT deep dive. And it was a discovery program. And we used to have a whole information about it so that the client didn't feel threatened. They didn't feel, why am I giving, or a prospect didn't feel threatened, why am I giving all my financial statements and information to you in advance of engaging you? That, you know, it was part of the process and they understood it. Management reporting framework, as we've discussed, financial modeling and business strategy, we've discussed, We called our support and accountability. We had 2 levels, actually, CFO and FD support. Scale It was our scaling up packages and support and what we used around those areas. And then obviously exit and planning and maximizing value and helping them through that whole sale process. So this was a beautiful way of explaining to a client the journey they came on with us and really demonstrating value well in advance of engaging with us, or for clients that potentially only used us for compliance, to at least have with a pre-year end meeting a discussion about what other services we could help and push them forward. And it was a really, really good tool. So a little bit about Clarity and how this might help you with your advisory solutions. So Clarity is a global advisory platform. It was built from really our understanding of advisory, what we were doing, how we were doing it, and what was lacking in the software tools that we were using at the time. And so Clarity is there really as a bridging the gap between small businesses and their advisors. The 3 key areas that we're looking at primarily are helping business owners understand their numbers, especially the 7 key numbers in their business, understanding what changes in those businesses do to performance, to profit and cash, and helping them understand how they can achieve those targets and those goals. So setting goals for the client, creating a who, what, when action plan so you can hold them accountable, and all those things that we've discussed, helping them on that journey. So it's really where the conversation starts. Where are you now with your 7 key numbers? Where could you get to? What's the gap? And how do we help you close that gap? So that's a really interesting starting point to the Clarity platform. We've also got a step-by-step business development program to help create a world-class business. And this is primarily an output of a data room. So we've talked about the 7 business assets, and this is all built around the 7 business assets and the 7 key business assets in all businesses. And we've done it in a structured way to enable people to get access to cash and funding really quite quickly and easily. So how does this benefit small businesses? Well, it helps them get better advice. It keeps all their information in one place. It helps them understand their numbers. It gives them a clear strategic plan, helps them with an easier and more valuable exit, and also helps them get access to the cash and funding they need desperately to grow. How does it benefit you as accountants? Well, there's no time-consuming setup. So we take APIs from both Xero and QuickBooks and suck the data straight in to be able to give you an analysis of their 7 key numbers. If you're not using QuickBooks or Xero, then you are able to manually input that data. It helps with easier trends and benchmarking and KPI analysis. Helps you give better advice and exit plans for your clients. It's actually a practice development plan for your firm, and helps you generate those additional revenue streams and get the revenue that you really need. And some of our members are getting 9,900% return on investment, because obviously the subscription is so low. There's a lot of benefit to them in signing up for Clarity, and also it gives them a scalable advisory solution. So we know that and in our businesses, scaling advisory is tricky, and cascading it down to the frontline troops is really what this is all about. So, sorry, I've gone backwards for some reason. So if you want to arrange a demo, please contact us. We do regular webinars where you can find out all about Clarity, but if you want to specifically set up a demo, then we can arrange that and take you through and show you what Clarity can do for your business. So thank you so much, and for your patience with the overrun. I really appreciate your time, and I understand how important your time is. I think we've answered most of those questions, Amy, that arose. I think there's 1 or 2 that we might need to get back to a few people on. But as a thank you to everybody who's attended, we've provided a day's education to protect your girl from being trafficked. So apologies for overrunning, and I hope you appreciate that gift as our apology for doing that. And if you want any more information, please do get in touch with us. Follow us across most of the social media platforms at clarity_HQ, or go to our website, www.clarity-hq.com. You can also find out a little bit more about the blockchain element of our platform and what powers blockchain, and the Clarity token that powers the blockchain, if you go to clarityproject.io and download the white paper there. So thank you very much. I hope you've enjoyed our webinar. Thank you for your patience and staying tuned, and goodbye from me and from the team.
Cheers. Bye-bye.